Hi everyone, in this video we're going to talk about Chek, the clinical stage medical diagnostics company engages in development of capsule-based system that utilize low-dose X-rays for screening of the colon to detect polyps, masses, and colorectal cancers in Israel. Full information should not consider as investment advice. So the company have already market cap of over 60 million, and the site didn't reward the stock very well because it finds only risks based on the earnings that are forecast to decline by an average of 7%, almost 7% per year for next 3 years. Shareholders have been substantially diluted in the past year. Also, unfortunately, the company is currently unprofitable and not forecasted to become profitable over the next 3 years. Also, the volatile share price over the 3 months, and there's one more risk that is does not have a meaningful market cap, which is currently the 67 million. And as you can see, the stock price pumped up in the last session, and it pumped over 200%, which is fantastic. And as you can see here, 7-day return almost 300%, but in 1 year it is almost 15% minus. So with those numbers, doesn't beat industry and market if you consider long-term investments. Valuation side, PB ratio 3.32, but tip rank does have the target and forecast for the stock. It's currently 1.5, so there's a little bit upside based on fundamentals. So I think this stock will grow, and it will grow because of the pre-market is already after hours 64% plus, so it's huge numbers there. Future growth minus 6.8, so it could decrease by those numbers that are nowadays. Earnings per share growth forecast, as you can see, it is going whole time to the better direction, to the positive earnings, and it's not forecasted till the end of the year to become profitable. Past performance, the earnings decreased by 6.6%. Financial health side, we see here that this is pretty much a good thing. The company is debt free, and the equity, as you can see, they have currently since last earnings 21 million cash. Currently the company doesn't pay dividends and on insider trading, so there's no volumes. And on the top shareholders, we see the biggest ones shareholders have been not changed anything, but there's others that brought the stock. For example, UBS Asset Management added over 4,000%. Symbol safe dividends showing that earnings per share was going all the time to the right direction, to the positive. And unfortunately shares outstanding, so I think this is the one that from where they get the money. So currently last 12 months shares outstanding to almost 21 million, and it's basically good for the company that they are not having debt, but they are just increasing the shares that they have to cover the expansion expenses and researches and so on. And unfortunately, they have influential data of the total sales. Anyway, investing.com, some of the stock for long-term investors, and I recommend highly to invest in the long term and base it on not only technical but also the fundamentals. Yeah, investing.com starting the stock as neutral, and by moving averages as a sell and technical indicators buy. Yeah, thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.